The bulls are back on Dalal Street and so are the FIIs. The Nifty and the Sensex snapped a two-week losing streak. How is India standing tall in a challenging environment, and where are foreign investors placing their bets? Hello and welcome to the Editors Roundtable. Yet again, it's me, Sonia, and I have all the editors here with me, Anuj, Nigel and Nimesh. Folks, it was a good week, and more importantly, I think not only did we break our losing streak, we had big participation coming from large sectors like the banks.
Sonia, even the losing streak was a very minuscule losing streak. And I'll give you a mind-boggling statistic. Do you know this week, the mid-cap index was up for, in terms of consecutive weeks, how many consecutive weeks?
About 8 or 9?
12 consecutive weeks, which makes it 3 months. 3 months, the mid-cap index has not seen red. Yes. On a weekly basis. I mean, you could call it exuberance, you could call it whatever, but when the mid-cap index rallies like this, that's when you feel good about the market. There are two kinds of rallies. One is when the rally is quite narrow, and it's just index which makes money, and people feel left out. They might still feel left out, but their portfolios don't do well. They say, okay, index is doing well, but portfolio is not doing well. This is a rally in which people's portfolios have been repaired after that mayhem that we saw in May and June. So I think in that sense, for me, that really has been the key point. And of course, a lot of laggards made a comeback this week, like IT. So that's also another talking point.
Oh, absolutely. And we were discussing this, right? Now, if you go into a room with 20 people, 21 people are bullish, right? So that's how exuberant the market.
I went to a room last Saturday where there were 450 people. All retail investors. I went for a conference. Some of the biggest marquee names were there as keynote speakers, and I could sense the kind of interest which was there from retail investors towards equity markets. Everybody wants to know newer ideas. Everybody was talking about where to invest, how to invest, how do we do asset allocation. So clearly there is a lot of interest from retail investors, and especially Chennai crowd. Yeah. They are so much into equity. The equity culture is so good in the south. And some of the largest investors who I met from the south, they are not convinced or happy with even 10x and 20x. 20x
Wow.
is like, oh, it's okay. 100x, 200x is what they talk about. That's the kind of equity cult which is there in the south, especially with larger investors who want to make a real big killing in the equity markets. And one more feedback for the entire team. As I said, there were 450 retail investors who participated in that event. So many people came and spoke to me, and everybody was so much of praise for you, Anuj, Nigel, the entire CNBC team. They are like, you guys do a fabulous job. I'm a big fan of Sonia. I want to meet her once. I track Anuj's big morning call every day. I said, yeah, that's what we try to do, right? Just try to help out the retail investors. So much of appreciation for the kind of work everybody in the team
does. And of course, we appreciate our viewers.
Exactly.
We are nowhere without them,
that's
right?
That's what we aim for, right? Just to help the viewers as much as we can. Like, in whichever way, whichever form, analysis, managements, everything. That was such a big high for me.
The big highlight.
So much of love and affection for the entire CNBC team, and so much of people just so much eager to meet you or talk to you or like follow Anuj's tweets and all. It's amazing. Okay,
so let's talk about the markets then. Anuj, what was the big highlight for you this time around? Was it the exuberance? Was it the euphoria? And what are the numbers you're looking at?
Let's actually throw the numbers at the wall. And basically the key talking point this week is the kind of FI data that we got and what kind of stocks are FIs buying. The FIs are back, absolutely no doubt about that. Now, this is the month of August when we have the final number now. This is the NSDL data. So this is the official data counting for each and every cent. 51,204 crores, which makes it $6.4 billion. That's a lot of money, right? Which is chasing our market. But, I wanted to know what exactly is this money backing. Now, this is what it is, and I'll spend some time here. What are FIs buying? Now, 8,600 crores of healthcare that you see is entirely because of that Max block deal. Otherwise, healthcare has not been a preferred sector. What's been the number one preferred sector? It's financials. Over 6,000 crores of buying is what you have seen in financials from FIs, and it's no surprise that the bank Nifty has been doing what it is doing, really outperforming. Capital goods, 2,200 crores. Consumer, now consumer 2,100 crore. I mean, if you compare consumer to financials, actually consumer is even bigger because consumer index is much smaller than the financials index. So this 2,100 crores also explains the outsized gains that you have seen in the consumer basket. And why these three pockets are important is for all of those who remember that early 2003 to 2005 rally. I remember because I started my career at that point. This is exactly the kind of stocks doing well. Financials were leading it. capital goods were surging because the bet was on the economy and consumption was doing well. When consumption is doing well and those financing consumption are doing well, you know the economy is doing well. And I think that is the big bet that the FIs are taking on the economy. It's further corroborated by the fact that, again, autos, 1,900 crores, telecom, 1,600 crores, FMCG, 1,500 crores. What's another common theme amongst all of these? X of healthcare, of course. All of them are domestic-facing stocks. Now look at where the FIs actually sold. A little bit, not a lot. Media is a small sector, but IT. 600 crores of selling is what you had from FIs in the IT sector. So that's the large theme. Now, you know, then I thought that, okay, what kind of stocks is this money really chasing? Let's drill it down. Let's start with financials, ICICI Bank. Now, the stock is up 10% in last 1 month. Look at the average delivery volumes on ICICI Bank. This is a giant cap stock. 73 lakh shares delivery volumes on a daily basis, which is up 20% from its recent averages. The other go-to stock has been State Bank of India, country's largest bank. That stock is at lifetime high. It's the biggest outperformer. In fact, it's outperformed ICICI Bank as well, both on a year-to-date and on a one-year parameter. And average delivery volumes, again, 57 lakh shares, up 18%. You know, when ICICI Bank and SBI do well, that's telling you that it's a bet on the country's financial savings as well. Now, capital goods. The one stock that really stands out is BEL. I think for me, it's been the most remarkable stock of last 1 or 2 months. Average delivery volumes of 37 lakh shares, up 30%, and this stock is up 20% since August. So that's the kind of move that you've seen in BEL. In consumption, Titan very quietly has moved up. I don't think too many people have noticed, but the stock's moved up 10% since August. And again, decent delivery volumes as well. 4.5 lakh shares is what you've seen. Now, autos, this is a space, of course, Sonia, you track as well. Now, all the talk has been about Mahindra and Mahindra, but the month of August has been catch-up play in these three stocks. Look at the moves in TVS Motor, Eicher Motors and Ashok Leyland. TVS Motors, stunning move, 15%. Eicher Motors reclaiming its old glory, and Ashok Leyland was up about 10%. And just to round things off, IT is still underperforming. Despite this week's outperformance, TCS is down 4% since start of August. It's underperformed Nifty by about 8%. And it's underperformed Nifty by about 18% this year. So this selling that you're seeing in IT from FIs, my sense is largely because of Infosys. But the big talking point is really the kind of buying that you've seen in financials, auto, consumer, basically the domestic economy. FIs are turning bullish once again on India. Nimesh, over to you. What are you tracking?
So, Anuj, you know, as you said, you know, FIs are back, and that was the theme for the last 4 or 5 weeks, right? That I've been continuously saying that that's the feedback from dealing rooms, that the FI is putting money back and they have turned buyers. So that's playing out in some sectors and stocks as well. You know, for this week or for the last few days, the overall feedback from the market. One, India is continues to outperform, and largely because of the FI money which is back, and they're backing some of the large cap names within financials and the auto names and all. Technically, now the feedback is both Nifty and Bank Nifty are above the breakout level. So there is still a lot of room, you know, above 18,000 on the Nifty, maybe above 40,000 on the Bank Nifty. You're going to see more money chasing those sectors and a bit of short covering as well. So that's the technical factor that one needs to watch out for. From a retail participation point of view, look at the you know, mutual fund data. There is a bit of withdrawal of money from the retail investors, and that's what is pinching a lot of retail guys. You know, there is a bit of left out feeling as well. Even in the conference there in Chennai, there was a feeling that, oh, we sold out a little early and now we want to catch up and again reinvest. So there is a bit of left out feeling as well among retail investors. Having said that, money back, there is a lot of momentum. Everybody's talking about markets going up. There are a few signs and indications of being a bit of warning signals, so to speak, in some pockets, and something that we need to watch out for. One, of course, the quality of small caps that have rallied in the last 10, 15, 20 days, you know. And when I talk to a lot of dealers and market participants in the market, everybody has a story to sell, and those stocks go up. So that again is a sign that there is a bit of exuberance now in mid cap, small cap. Some quality stocks are giving an indication that, hey, you need to be a bit careful, you know, going forward from here on. Also, the supply of paper. While, you know, you spoke about FIs buying, there is constant supply of paper coming in from strategic investors. Even this week, there is so many large block deals have happened, right? Interglobe, Gangwal has sold 2.8%. He owns 35%, by the way. So there is going to be, you know, supply of paper on that group. Syngene, Biocon sold 5%. CG Power, you know, one of the largest Standard Chartered Bank sold out. Bharti Airtel, Singtel is selling out. So there is the supply of paper which will balance out the FI flow, so to speak. But there are some signs now of a bit of exuberance in some pockets which one needs to factor in. But technically, market looks like in a sweet spot to rally further from here, purely from a breakout point of view.
Okay, so since FIIs are, putting in a lot of money in the Indian markets, the question we're asking is why, right? Why are FIIs putting money in India versus others? So I decided to put together some interesting data on how India is outperforming despite the global macro situation. So let's take a look at it now. Well, the big question that we're asking is why has India outperformed global peers? Are the macros in India much better than the global macros? And here's what we found out. First, take a look at the outperformance that India has seen versus its peers. The Nifty is up 3% this year versus most global peers under pressure. The S&P 500, Hang Seng are down almost about 16%. Now, let's look at the global environment, which is very challenging at the moment. The dollar index hit a 20-year high of 109 last week, versus about, say, 92.1 in 2017 and the all-time high, which was 120 way back in July of 2001. Just look at the trajectory that the dollar index has seen, and of course we do know that a higher dollar index is negative for risky assets like equities. Let's move on to the US 10-year yield, which rallied from 2.6% in August and now it's at 3.3%. Apart from that, there's been a sharp surge in global energy prices as well. US natural gas prices have seen a 50% rise in the last 3 months, from $5.4 per MMBTU all the way to $8 per MMBTU. European natural gas prices have also risen and are now at the highest since July of 2008. But let's move on to Indian macros and see whether they are improving compared to global peers, and the answer is a big yes. Take a look at Brent crude prices, down 30% from March. 10-year yields have softened to 7.2%, which is down 83 basis points from the month of June. And then you have the Indian corporate profitability, which has improved quite a bit. Motilal Oswal put out a report where they said that the corporate profit to GDP ratio is now at a decadal high of 4.3% for Nifty 500 companies, and Motilal estimates an 18% Nifty EPS growth in FY23. Not just that, inflation has been falling for the last 4 months and the PMI data remains elevated at 54 plus. So all in all, Indian macros are definitely improving compared to its global peers, and hence the inflow of FII money. Let's take a quick break on that note, coming up with lots more on Editors Roundtable. Stay tuned.